Let's talk numbers with Sunil D'Souza, Managing Director of Tata Consumer Products. It's fantastic to connect with him. Sunil, good morning. Thank you for joining us. I'm going to start. Are you back at office? Looks like I can see the shelves. No, I'm saying looks like you're back at office. I can see the shelves behind, all the Tata Consumer Products being displayed.
Yeah, Nikunj, very much back in office and very happy to talk to you.
Okay. Lovely, likewise. Let's first understand the big picture. I'll get into specific of numbers, but this entire concern which everybody is facing in terms of high inflation, impact on raw material, and a drop in demand. Are you experiencing these three pain points again?
So, Nikunj, just to take a minute before I answer that question, just to highlight the results that you've declared. I think all in all, given the macroeconomic scenario, the pandemic, and all the volatility that we saw, I think we declared a pretty good set of results. Cycling a 26% top line of last year, we still grew 4. EBITDA came in plus 45, and group net profit was 200 plus. Financial metrics, if you look at it, our EBIT came in 400 basis points better, 12.2. Driven by tea, which is now back on a firm footing on margins, 21% moving to 36. Working capital down 5. Inventories in absolute terms lower despite the higher volume. Free cash flow 100% of EBITDA. Cash, despite all the investments that we've done, still higher than slightly higher than last year. Even the strategic numbers, market shares, tea, salt, all positive. Outlet expansion continues. A&P up by 29% for this year. Innovation 3x where we started. Growth businesses up by 52%. So all in all, I think we've exited last year on a very good note. Now, to answer your specific question about inflation and the impact, at least that we see on Tata Consumer, I'll answer it in two parts. First is the raw material pieces, right? The good news for us is our three big commodities are tea, coffee, and salt. And in all these three commodities, we have seen a spike happening over the last 6 to 12 months. And we've been taking judicious pricing to make sure we don't lose momentum and don't lose market share as we take that pricing. And that I think is quite evident. In tea, despite margins being brought back on track, our market share is up by 100 basis points, right? So tea we see broadly as range bound, having come off its highs. Coffee spiked to about 230, 240, right now range bound between 220, 230, and we've taken pricing in our US business as well as other geographies in which we operate to put margins back on track, and we're continuing volume. In salt, we saw a big spike with energy as well as lack of brine in Gujarat with extended monsoons. So we've taken some aggressive price increases from last July. Last one, we took it in April. So broadly on the margin front on raw material, we are okay. The good news is we are not exposed to the big spikes that are happening right now. Palm oil, sunflower oil, wheat, all those pieces. So raw material, we might see some ups and downs, but small pluses and minuses, not the big numbers that we're hearing for other FMCGs. But that said, we will see some impact of oil and related inflation like freight, logistics, packaging, etc., etc. But that is something we've got to deal with. We will continue to make sure that we take judicious pricing while maintaining momentum, but most importantly, not losing sight of the longer-term picture of maintaining market share.
So the uptick in sales, how much of that is largely because of volume growth, and how much is uptick is largely coming because of inflationary factors?
So overall, for the last year, we did have volume growth in both our base businesses of tea as well as salt, right? So salt grew by about 8% and tea has grown by about 3% for the year. Now, salt for the last quarter did have a dip, but we have to remember we're cycling about a 20% growth of the same quarter the previous year. So you have to look at it in respect of that and the fact that we took some price increases, which did have an impact. So overall, I think tea, if I just look at it from the Nielsen numbers, January and March came in at close to a 5% growth, which means the tea business is back on track. And therefore, as long as we maintain stability in terms of pricing and execute well, we should be seeing that 5 to 7 is the long-term number. Salt, again, we have seen this dips happen when we've taken price increases, but we do expect starting this quarter to come back to normalcy. So overall, we will see a trending back to long-term growth rates for all our categories. But that said, we will have to make sure that we are balancing that with some amount of pricing as required when we're seeing inflation creeping.
EBITDA margins, and I'm looking at year-on-year numbers from single digit to double digit. 9.9 has become 14. But in between quarter, it's come down marginally by about 50 bips. I'm referring to the EBITDA margin, sir. So this is the peak of raw material pressure. That's what our understanding is. So can I say that EBITDA margins from 14, the directional curve is going to be much higher, not higher, but much higher. I'm insisting on the word much higher here.
So Nikunj, I would live with higher. I think longer term, it will be much higher. But you have to remember fundamentally that we are a growth company, right? So we have the core businesses of tea and salt, which will probably grow high single digits to low double digits. But we are, like I said, we are investing in growth numbers. Our Sampann, Soulful, Ready to Eat, Tata Q, and Nourishco businesses grew 52% this quarter, right? So we are making sure we are investing behind this. The gross margins are healthy in all these businesses, and we will make sure that they're healthy. But we will invest behind these businesses on brands, infrastructure, distribution, etc., to make sure we are on a strong footing. So EBITDA margins will trend higher in the short to medium term, and definitely much higher medium to longer term.
Spoke last time, you did indicate that the endeavor is that either you want to be number one or number two in all the categories you represent. So why I'm asking you this question is because the Economic Times today is reporting the same, and it's not my story, sir. I'm quoting the Economic Times here. Tata Consumer has a big plan to move into home and personal care. If that is right, so then what is the plan? Because that is a very competitive category. Are you looking at becoming a sizable player in that category?
So Nikunj, I'll just dial back. Tata Consumer was created to be the FMCG, or to fulfill the FMCG aspirations of the Tata Group. Tata is probably the most recognized brand name per se in India. And therefore, I think we've got every right to win as we expand across different categories. That said, we are measured and we are calculative in the moves that we're making. As I said, we will first become a larger food and beverage company and then look at a full FMCG play. Now, as we go there, we had to do two things. Number one is we had to synergize all the different pieces that we had in our businesses. The last piece that we put into place was the Tata Coffee merger, which we've just announced. So then that creates clear verticals across different businesses and simplify all the businesses. So the other big piece is we are simplifying the number of legal entities. I do think a large amount of the simplify, synergize piece is largely in place. So now it's about scale. And as we go towards scale, it is expansion of portfolio and playing in different pieces. There is a roadmap that we've drawn up. This involves both organic as well as inorganic. There are quite a number of pieces that we can do organically. But we do realize in many of the categories, we either do not have the DNA or like you said, it's a very competitive category, or we do not have the technological know-how, etc. So those we will be looking at inorganic spaces. Ultimately, the ambition is to become not just an F&B company, a large FMCG company.
Isn't the FMCG space a very, very competitive space? I mean, the categories which you represent, whether it is the stall category, the tea category, or the beverage category, you have a niche. You have a great distribution. You've turned around the company by improving the return ratios. But if you get into other categories, whether it is home care or personal care, those are very competitive categories with different dynamics, and the gestation period would be very different. So how does this sink in with the earlier guidance which you had given, where the promise of higher ROS will come through? Because if you're diversifying, then the return ratios will get compromised, won't they?
So Nikunj, I would probably beg to disagree, because I think it's an and game and it's not an or game. Just as a perspective, we're sitting with cash, we could have done a lot of things. We look at a lot of businesses on a constant basis. We look at a lot of opportunities, but we're very, very calculative. And we do think if we are calculative, if we are figuring out a right to win in any category, and then we enter the category with a very clear execution plan, we can create value. So as we've looked across categories, I would say 4 or 5 things are very important, like you rightly said. What is the size of the category? What is the fragmentation or the concentration in that category, which then defines the margins that you make? Are those margins good enough? Are they accretive to the Tata Consumer? Like you said, EBITDA longer term, we've got to grow, and therefore the margins have to grow. What does the Tata brand name bring in that category? There are very many categories which are trust deficit. As the Tata brand name comes in, we do think we can create value. And do we have the R&D or technological expertise? So as we're looking at all these pieces, we're making sure they fall into play. And then, of course, the important thing is everything that we do has to be accretive, because we do realize we've got a long way to go in terms of coming up to best in class on gross margins, EBITDA margins, etc. But again, I'll repeat, it's an and game. It's a fine balancing act. And we will need to continue to execute very strongly against the plans.
Hi there, good morning. So it's an and game, not an or game, but we here in the studios are talking about the Tata New app as well, and how that's really going to be a game changer. All of us have certainly already downloaded it, pretty addicted to it. So just walk us through how that's really going to synergize with Tata Consumer, Starbucks, the other products being sold on the app, and how that's really going to benefit in the long haul.
So what the Tata New does is it helps bring the Tata different businesses together in front of the consumer, right? So you'll see all the consumer-facing businesses out there, and the big thing is you can keep switching loyalty points, keep doing different things, and it brings all the businesses on one simple app to the Indian consumer. For Tata Consumer itself, I think we participate in 2 different ways. Number one is the Starbucks piece out there, where the consumer has the ability to buy Starbucks and then the loyalty points get transferred across. That is an option. And the second thing is Big Basket, which is already out there, and we partner very, very strongly with Big Basket to make sure we accelerate from there on. There are very many more plans for Tata New per se, and Tata Consumers play in Tata New per se, but I would say watch this space.
I'm going to take the clock back, and I'm going to take the clock back from when there was a change of guard and you took over as the CEO. You've demonstrated the focus on return on capital, cutting the flab, and reinventing the entire product line. But that's work in progress, and that is not demonstrated in your quarterly numbers. Next 3 years, what should we expect from Tata Consumer? I mean, will it be expansion in non-core categories? Will it be a lot of inorganic growth? I'm just trying to understand the broad thought here in terms of getting a roadmap.
So Nikunj, I would say we are probably 10 minutes into a 2-hour movie right now for Tata Consumer. That's how I would frame it. We've just about got started. As I said earlier, I think we've sort of done the synergize and simplify pieces, and now it's about scale. And as we go to scale, we will have organic and inorganic. There will be places in which organic probably is the right thing, but in many other places, inorganic would be the right place to do, because either the time required to build it organically, or like you rightly mentioned, the expertise required to succeed in those categories, or the amount of money that you would spend growing organically would not make sense. So I think you would expect to see significant scale up from Tata Consumer and bulking up in terms of top line. But again, very measured manner. You will not see us, pardon my this thing, like a headless chicken just bulking up for the heck of bulking up. I mean, it has to be a profitable flow through. The EBITDA margins have to move up. Gross margin profile has to be accretive. The return ratios have to make sense. And net ROC, which is our big bugbear, has to move north. It has started inching up, but it's still not where it should be.
You're happy as a ROC number. What is that number which will get this big smile on your face?
Number, I would say we will continue to target double-digit top-line growth. Actually, this last year, we just missed the number by a whisker. India business did grow by 13%, but overall we came in 9. We missed the double-digit number by a whisker. So double-digit top line and significant increases in EBITDA and in terms of ROC.
I really appreciate your time. So glad you could join us, and certainly hope to see much more of you going forward.
Thanks, Nikunj. My pleasure.